Case study number 2. What's really interesting is the carriers that have done this outside of just personal income replacement. We had a surgeon group with 39 partners. Very quick story. One of the partners goes out on disability. He's an orthopedic surgeon. He went out on disability for 6 months. Fortunately, he had a personal disability insurance policy. His family was fine. It was at 65%. He continued contributing to his asset and his financial plan. He gets back from disability. 6 months later, he's fully recovered. He's back to work. And his fellow partners sit him down and say, okay, so here's all the overhead expenses that have happened since you left. We're transitioning you back in. And by the way, here's your $210,000 bill for your portion of those overhead expenses. Because guess what continues whether he's at work or not? The rent, the electricity, his employees, trying to reschedule his patients to other doctors, all of those expenses continue. And so even with personal disability insurance, his financial plan has drastically changed, at least taken a hit. The only way you recover from that is you change your lifestyle so you can retire on time, or you're working later. And so we brought this guarantee issue chassis to a firm of 39 physicians, and we offered them a business overhead expense policy. Completely guarantee issue, all tax deductible premiums. Marie can confirm that with me. By the way, I'm really excited I can deduct all my business entertainment expenses now that Marie said it. I have it on recording in case any of you want me to send it to you. But that was the highlight of my Winterfest. Last one, we were dealing with a real estate development company. The CEO had a $200 and something salary, but $3.7 million restricted stock unit that he was awarded every year. Frankly, his lifestyle is more reflective of the $4 million total than the $220,000 cash compensation or W-2 wages. And he reached out to his advisor to say, man, I'm making all this money. I'd really like to protect the stock options because all of my money is tied up in assets, long-term assets, and legacy planning. And if something happens, I have to tear apart one of those plans. And the advisor said, I'm not taking a 70-year-old through underwriting, and you're not going to like the price that you're going to have to pay for it. So the one thing I do know is that you're a publicly traded company. You're probably not the only one receiving a stock option. How would it make sense to make this guarantee issue, bring the premium down, and offer it to all of your executives as a financial wellness tool? And that conversation sits pretty well with clients. And so that's what we were able to implement here on a guarantee issue basis. Folks, the moral of the story is we need to be thinking different because today's consumer has so many different resources available to them. They're used to things like Amazon bringing them solutions faster and easier and cheaper than ever before. We have that capability in products like income protection and disability insurance. It's just a matter of thinking different to serve that population. Thank you so much for having me. Really appreciate your time.